Good morning, guys, and welcome everyone to the Moneycontrol live stream. You're watching the opening bell, and I'm your host, Nifty. Well, Nifty seems to be poised in for a mildly negative start after three consecutive sessions of gains coming in from the Dal Street. SGX Nifty at this point of time is indicating a mildly negative start near the crucial support level of around 18,250 mark. Any attempts to surpass that 18,400 mark in the last four consecutive sessions thus far have been failed. US stocks ended negative as negotiations on debt ceiling continue to be a drag overall on the risk appetite. Along with that, following the cues of the US global markets, Asian benchmarks fell on a debt impasse, sapping in the risk sentiment. FIIs, they've bought shares worth around 182 odd crore, and DIIs too have purchased shares worth around 397 odd crore. But let us get going, discuss some stocks and strategy today with Rajesh Palviya, Senior Vice President Research, Head Technicals and Derivatives at Axis Securities. Good morning there.
Good morning, Nikki.
All right, Rajesh, I'm going to start off by asking you about your assessment overall for the markets right now. Three consecutive sessions of gains coming in for the market, but any attempts around that 18,400 mark has been, thus far has failed. Do you think that act as an important resistance level that the market has been facing thus far? And any, if it manages to surpass that level, you think a different bull run will start, a phase for the bull run will start for the markets? Your assessment?
So if we analyze overall month of May for till today, it's a very good series for the market. We have seen a lot of stock specific activity as well as index has also performed, and buy on dips was the strategy for throughout the series. Looking at the data setup as we are approaching to this expiry, so still the data setup is on the bullish side, and looking at the overall setup, there was short covering action in the previous session also. Yes, there is a call writing activities happening at 18,400, 18,500 side. That is the immediate challenge for the market to cross those levels. Once we able to cross above 18,400, then yes, this rally can extend further higher, and maybe we can approach almost closer to all-time high trajectory also for Nifty also. So overall strength is there, be it technical parameter, be it on the derivative side. We believe that, buy on dip should be your strategy at this moment also, as put writers are also active at 18,200, 18,300, 18,100. All strikes are attracting put writing activity, which clearly indicates that, the base is shifting higher, and whatever dips we are getting in market, buyers are ready to buy those dips as overall sentiment for the market is on the bullish side. So to initiate this buy on dip strategy ahead of this expiry, we are initiating again here to buy call option of 18,300 strike. Though we are getting some downtick as the indicative tick from the SGX Nifty is suggesting that we may open some on the negative territory. But still, if we get any dip closer to 18,270, 18,250 is a buying opportunity. So we are initiating here to buy 18,300 call option, which was yesterday closed at 91 rupees. So if you get a chance to buy this call option around 65, 60 rupees, you can buy with stop loss of 30 rupees. And again, we are expecting that, bounce back will come in second half, and possibly this call option can move higher towards 130, 140 zone. So 18,300 call option is a strategy to buy in today's gap down opening.
All right, so that's the call coming in around that 18,300 mark is what Rajesh has suggested. Bank Nifty levels, that's the one where we are keeping close eye out on. Consolidation around that all-time high levels that we're witnessing for Bank Nifty overall. Rajesh, your strategy on Bank Nifty and also your strategy on two profitable ideas right now for the viewers out there.
So Bank Nifty is still shying to cross its all-time high trajectory. This is 6th, 7th attempt in last couple of trading, last couple of weeks, and Bank Nifty is still not able to give breakout decisively above 44,100, 44,200. But looking at the overall data setup, looking at the behavior of the Bank Nifty component, we still hoping that maybe we can get this all-time high trajectory for Bank Nifty next one or two trading session, as overall setup for Bank Nifty is also on the bullish side. So 43,700 is the key level to watch for. Until we are not breaking below those level, buy on dip should be your strategy for Bank Nifty also. So again, in the Bank Nifty, as looking at the data setup also, 44,000, 44,200 strikes are attracting more call writing activity. So that level is, acting as a resistance and supply zone as of now. But on the downside, 43,800, 43,700, these all strikes are having major put-based concentration. So we believe that, buy on dips can work in the Bank Nifty also. 43,700 is your stop loss. On the higher side, once we crosses above 44,100, then this really can extend towards 44,400. This could be the possible scenario for Bank Nifty. So you can buy in the dips for Bank Nifty also.
All right, buy in the dips for Bank Nifty as well. That's the strategy coming in. We are going to get back in terms of the profitable ideas just after the markets open. But a bunch of stocks that we'd want to track this morning: M&M and Polyplex, NMDC, Biocon. These are some of the names that we'll be looking at. M&M. Keep an eye out on that one. It's going to be a block deal which will probably take place or has taken place. M&M to sell 3.2% stake in Mahindra CIE Automotive via the block deal. The deal is likely to be at a discount of 5 to 6% to the current market price shares. Now do remember, Mahindra CIE is that closed in higher at around that 453 mark in previous session. It's going to be selling in that. And the Kotak Securities is likely to be the broker for the deal. Now, reference for this one was back in March. M&M offloaded around 6% equity in Mahindra CIE via block deal. So this is over and above what they've done in March. Polyplex, they're going to be selling in 24% stake to AGP Holdco for a concentration of around 1,379 crore. As per the shareholding pattern, promoters already hold on 50% stake. AGP has the right to increase its shareholding at a later stage. Now, on April 15, remember, Moneycontrol was the first one to report the stake sale plans of promoters of Polyplex and the investment bank. Goldman Sachs had been then reported as roped in as an advisor. But let's address the market open for you, right? Before we address the other stocks and news, bunch of names out there in terms of the earning profile of these companies. 18,250 mark. That's the one, that's the level that has been held on to. The losses are to an extent of 0.25% for this one, more than 0.3% on this one, but 18,250 crucial support level. That's where the markets have opened. Just how we pointed to you right at the opening, right? SGX Nifty indicated this amount of opening coming in for Nifty 50 remains to be seen if we manage to surpass the 18,400 level, which is a crucial resistance level, or the support, which is 18,250 mark. That remains to be seen. Bank Nifty, on the other hand, that's also down and out and probably dragging the markets lower with losses of around 0.4% out there. 43,750 mark, comfortably sitting around that. But with losses, after the consolidation has taken place around that all-time high level, you're seeing that momentum, lack of momentum thereof in the Bank Nifty index. Mid cap index down and out with loss of 0.25% out there. Small cap index, that's another one for you. Just to see how that's shaping up. Mid cap saw some losses. Small cap is no different out there. Losses to an extent of 0.2%. A little different than what the broader counterparts are. They're probably sitting in with the higher losses coming in for the markets. But overall, it's a sea of red coming in for the markets this morning. FOMC meet. That's going to be taking place and the minutes are going to be released. And ahead of that, you're seeing the cautious sentiment building in for the markets. Nifty IT down and out with loss of around 0.5%, more than that. So the entire IT pack at this point of time, talk about the metal index too. Witnessing some amount of selling pressure in early deals with losses of around 0.1% coming in for the metal index right now. In terms of the other sectoral indices that we have right now, in terms of the auto index, which is down and out by 0.3% out there. In terms of the other sectoral indices like pharma, now that's the one which has managed to buck the trend with gains of around 0.25% out there. Probably the one which is witnessing some amount of traction amidst all the lackluster trades that we're witnessing this morning. But other defensive name out there, FMCG, that's also indicating of a flattish trend coming in with a negative bias. In terms of the consumption story, that remains lackluster right now with losses to an extent of 0.1% coming in even for the consumption basket overall. Talk about the realty index, 0.25% down and out for the realty index right now. Advances and declines, you have 27 advances, 14 advances as compared to 36 declines. So market breadth, clearly skewed in the favor of declines. Flirting around that 18,300 mark, that's Nifty 50 for you. But let's talk about the top gainers and the top losers there out for you. Adani Enterprises, Power Grid and Britannia. These are some of the top gainers that we have on our list this morning. Sun Pharma, DRL and Kotak Mahindra Bank. These are some of the other top gainers that we have overall on the list. Bajaj Auto, Hero MotoCorp, Divi's Lab. These are the other top gainers that we have on the list right now. In terms of the top losers that we have, Hindalco, JSW Steel and Mahindra and Mahindra. These are the other few stocks that are down and out in trade, along with the IT pack. Adani Ports too is down and out. So you have clearly the discrepancy being played out in the Adani group of stocks, where GQG, as apparently reports suggest that it's going to be picking in more stakes in the Adani group of companies. It's important given the Hindenburg saga that has come in, the new ruling that has come in by SEBI right now. A lot of uncertainty seems to be going away past the group of companies. And you're not surprised. Adani Ports is the one where most of the analysts are fundamentally bullish right now. But to talk about the other companies, Adani Enterprises, along with the Adani other group of stocks, they're doing well for themselves. Adani Ports is down and out. But I'm going to quickly touch base with Rajesh at this point of time and check with him his view on Adani group of stocks A, and also what does he make out of the entire profitable ideas that he has to suggest for our viewers out there.
So Nikki, Adani Group has shown very strong run up in last couple of trading session, and we still believe that Adani Enterprise can continue furthermore upside from the current level, as stock is now trading above its 50-day, 100-day moving average. The kind of short covering which we have witnessed in last couple of trading session, it's clearly indicating that if the stocks continues to hold above 25-50 level, then possibly next target for Adani Enterprise could be around 2800 in the continuation of uptrend. Adani Port is also looking very attractive. Though some dip is there, but still, if stock continues to hold above 700, 690 mark, then possibly again stock will get buying interest around lower level, and possibly this stock can really further higher towards 760, 770 zone. So Adani Enterprise and Adani Port is looking very attractive, and Ambuja Cement is also one can look at the current level, because Ambuja Cement also has managed to give breakout of its consolidation range. And looking at the overall setup, we believe that if stocks holds above 410 level, then Ambuja Cement is another stock where we can expect a further more upside from current level, and possibly stock can move towards 450, 460 zone also. So these three stocks from F&O space we like from Adani Group. In cash segment, we are not getting any opportunity to buy, because most of the stocks are hitting upper circuit since last few trading sessions. So there is no as such opportunity traders or investors are getting to participate in cash segment stock which are there from Adani Group. Now moving to the stock front, after opening, we still believe that Bandhan Bank one can look at to buy, because stock has shown very strong breakout in the previous trading session. And looking at the overall setup, we believe that Bandhan Bank can continue further more upside from current level. 265, 270 could be the possible target in short term. So one can buy this stock with stop loss of 246. Another stock which we like at the current juncture, that is Container Corp. Though stock is behaving on a sideways after opening, but still overall setup towards this expiry, we believe that this stock can really, and 690, 700 could be the possible target. So Concor is another stock where one can buy with stop loss of 646.
46 for Concor along with Ambuja Cement. These are some of the names that Rajesh has suggested this morning. But Rajesh, we're going to leave it at that, and thank you so much for taking out the time and speaking to us as always. Right, it's that part of the show where we address the fundamental side for you. We're going to be talking a lot about the QSR industry. We're going to be talking about the Adani group of companies, where of course the traction is. And Gaurang Shah from Geojit Financial Services will be joining us to take us through the details. Good morning there.
Morning, Nikki. How are you doing this morning? Thank you very much for inviting me for the show.
All right, pleasure is all mine. It's not exactly a good start for morning, at least when it comes to me, but I'm going to ask you about your end and the stocks that you're doing. You're looking at in terms of the Adani group of companies. We're seeing some traction building in Of course, Adani Ports is down and out, but overall some amount of news traction from SEBI, from GQG picking up more stake in the company. Hindenburg report now being a thing of a past for at least on the face of it for Adani group of companies. Do you like that particular space?
Well, Nikki, I heard you discussing this talk with the earlier technical expert. And my sense is that no fundamental or technical expert is in a position to give any kind of sound and wise advice on Adani group of companies. Of course, let me give you a disclosure first. We don't cover any of the Adani group stocks. I think the only coverage that we have is Ambuja Cement, if I'm not mistaken. And the problem with the Adani group companies is that it is not driven by technicals or fundamentals, but it is driven by news flow. And to prematurely guess the news flow is going to be extremely difficult for any individual, however smart or expert he or she is in his or her own field. You saw those days when the report hit the street. I'm talking about Hindenburg report. And post that, you saw the carnage that was visible on the entire Adani group of companies. Then you had days of choppiness, volatility, one day up, one day down. And recently, over the past 2 or 3 days, you've seen a significant or a fantastic rally, which I guess nobody would have guessed, honestly speaking. I stand to be corrected if I'm wrong. And today, you are seeing a little bit of, softness or lower levels. So, what I would advise all your viewers is that, use your fine sense of judgment and ability and wisdom. Take this into consideration before making any kind of trade into Adani group of companies. I'm not saying or advising buy, sell and hold. I'm only advising a word of caution given the choppiness and volatility that comes into the companies on fallback of news flows rather than technicals or fundamentals.
Right, that's precisely in bare minimum words that you've suggested few things for the group companies out there, but I'm not going to dwell onto it further. In terms of the entire sectoral review, let's talk about the hits and misses that have come through for the Q4 earnings season thus far. Hindalco is going to be reporting in the numbers, but overall it hasn't been a very pleasant show for the metal companies out there. The margins have been seeing a lot of volatility playing out, especially in terms of the setup that we've seen for the globe. Your specific list out there when it comes to the top gainers or the hits and misses that we've seen in the March quarter, and B, what do you make out of Hindalco right now? It's one of the top losers that we have on our list.
So I'll answer the B first and then I'll answer the A. So we have a coverage, Nikki, on Hindalco, JSW Steel, JSPL, Vedanta. Tata Steel will possibly give a recommendation to buy sub 100 levels on Tata Steel. So, and, this entire sector was heavily down and out because of the global news flows rather than domestic news flows. And we all know anything and everything that comes out of China has its own direct and indirect impact on the entire metal group of companies. But over the last 2 quarters, what we've realized that, first of all, the improvement in number is because of the input cost coming down, operating margins becoming a little bit more better, and thereby translating positivities on the bottom line. News flows, because of unlocking from China, has added to this particular sector, which was otherwise down and out. We also are of a strong opinion, Nikki, that the government is going to spend on infrastructure. And whenever you create an infrastructure, there are 2 basic commodities that you need, metals and cement, without which you can't create a durable or a long-lasting or a fine infrastructure. Anything or everything, even real estate, you need these 2 basic materials. So we remain positive on Hindalco, JSW Steel, to name a few companies. On the hits and misses, the first part of your question.
Gaurang, before you kind of go ahead with the hits and misses, a little argument that I have is it's a pre-election year, right? So sure, infrastructure ordering definitely will be higher. But do you also think the execution rates will be higher, which in turn will percolate down into the financials of both the manufacturers and the companies which source in the raw materials? Your assessment on this?
Well, so honestly, Nikki, I beg to differ.
All right.
Government has been spending on infrastructure since the time this government came into power way back in 2014. And that has resulted because, if you are dreaming of becoming the next trillion economy, or if you are dreaming of taking your GDP growth rate to maybe 6.57 and beyond, you can't do this without a durable infrastructure. And along with the durable infrastructure, you need to have modernized infrastructure. I'll give you one simple example. I think Udan and Udan 2 have been a classic example of how this government is spending. Look at the city of Mumbai, where you and me come from. The way metro rail work is going on, monorail has already come up in some places. Real estate sector is improving. Private capex is coming through. And not only at state level, but government at the center is also spending. So I think if you put all these perspectives together, I don't think infrastructure is going to stop just one. Infrastructure is only going to be a theme for 1 year before or after elections. Elections, and unfortunately, Nikki, let's face it, India is a country which sees elections every year, whether it is a state election or any other election. Of course, when the time comes and the tenure gets over. So we are into that particular phase. But I don't believe that it's going to be only 1 year before, 1 year after the election. And more importantly, Nikki, what has been shared by some of the top management of metal group companies is that they are seeing pricing coming back, pricing power coming back on both flat and long products. So we remain positive on the metals pack. Only problem is that global news flow have to support.
Sure, and that's exactly where most of the trouble is, right? The global news event and the entire situation that we're looking at across the globe. Probably India seems to be a little better space or better insulated as compared to the peers on the face of it. But, in terms of the hits and misses, that's where a conversation needs to be at. A lot of companies have already reported in the numbers. Probably just guessing in on your part, FMCG is one which is probably surprised the street, and IT is the one where a lot of disappointers crept in from your assessment.
Absolutely bang on, Nikki. FMCG, IT, banking, finance, overall banking as well as NBFCs. I think they've done extremely well. And the fact of the matter is that, there across the globe, there are two problems. One is growth and other is inflation. In India, you have growth steady. I think the latest United Nations reports pegs our GDP growth rate at 6.7. Correct me if I'm wrong. We are already clocking 6 or thereabout. We are decently better off compared to the rest of the economy, either developed or emerging. Inflation, well, we are at multi-month low, and number speaks for itself. Okay, so and we believe, and according to the commentary made by the Honorable RBI Governor, if we are going to stay here or low, third positive will be interest rates, which have been on a pause. And it will remain on a pause for a prolonged period of time. And if the inflation numbers are somewhere where the RBI and the MPC feels have a comfort in terms of elbow room, then you may see it coming down over a period of time. It may not happen immediately. So on all these three fronts, I think India as an economy, and of course on the earnings front, what we are witnessing in form of Q4, we've done reasonably well. So banking, finance, that is banking as well as NBFC, FMCG, autos, these have done remarkably well, and I think this momentum continues. The only joker in the pack, Nikki, is the El Nino, which is virtually at your doorstep with monsoons trying to ring your doorbell anytime from month of June onwards. So we'll have to just wait and watch how does that play, because rural economy is a big supporter of volumes growth for FMCG companies.
Sure, and that's exactly the worry that most of the FMCG companies will also be witnessing at some point of time. NMDC is one of the company also today, Gaurang, which is coming with numbers yesterday. And apart from the entire metal pack, now NMDC's number, if you talk about just the top line performance, it's come down by 13%. If you talk about the operational performance, that's where the beat is. Even though the company EBITDA is down by 20 odd percent, the number is coming at 2,162 crore. Your assessment A on NMDC, which has reported in better than expected numbers, and also Ashok Leyland. Now, I do believe that both these companies are completely from different sectors altogether. But since you've spoken about autos also in a bit, your assessment overall first on Ashok Leyland and then on NMDC.
So a blanket disclosure, we do have a coverage, and we are extremely excited about the new launches that Ashok Leyland has lined up. not only in form of new commercial vehicles with the ICE technology, that is internal combustion engine, but diesel driven, but also on the EV front and going forward, green hydrogen. I think that's going to be a major game changer. We have a target of 176 from a long-term point of view. As of now, we are still in the process of digesting and dissecting the numbers that Ashok Leyland reported yesterday. If all goes well, then we may, pull up the target price to a higher side. But as of now, we are working with 176 as target from a long-term point of view. And Nikki, what I'm trying to get across to your audience is purely from this perspective that, there is a white paper that is under discussion given by the respective agency to the government to phase out diesel engines. Now, I don't know how viable that particular proposal is going to be. But even if you talk about reducing the dependency on diesel-driven engines, electric buses, transportation, state transport, we're already seeing many of them in form of BEST, which is the local bus network run by the state government. Even in other states, you are seeing huge orders coming in for buses and of course energy efficient buses, from state transport authorities. At central government also, the Honorable Finance Minister has spoken about it in the budget to phase out and bring in new energy efficient and green vehicles. So you put all these things into perspective, I think the demand is going to go up. So we are positive on Ashok Leyland. On NMDC that you spoke about, unfortunately, I don't remember whether we have a coverage or not. But for the entire sector which NMDC is associated with, I think it is more important to look at consistency in terms of numbers. One-off quarter coming out good does not give you a conviction or a confidence to go long.
All right, so that's the word coming in for overall space when it comes to the metal and the auto sectors. But Gaurang, we're going to leave it at that. Thank you so much for taking out the time and speaking to us this morning.
Always a pleasure and honor. Thank you. Thank you very much, Nikki.
Right, pleasure is all ours chatting with Gaurang, who's full of ideas and expertise out there when it comes to the fundamental side of the game. But I'm going to be addressing in Biocon numbers for you, and probably we can look at the market reaction coming in for NMDC, Biocon, along with something like an Ashok Leyland, where we had a lot of discussion in and around. So Biocon numbers first for you. Revenue up by 57%. If you talk about the EBITDA, EBITDA performance, up by 69% to a number of 997 crore as compared to 862 odd crore. You can see the operational performance driving up the stock prices of Biocon early this morning. A margin at 26.4% as compared to 24.6% seen in the corresponding quarter of the previous year. Talk about net profitability, up by 31% to a number of 330 odd crore as compared to the estimate of 270 odd crore. So do keep an eye out on Biocon, apart from Dixon Technologies out there, where the revenues have been a decent show coming up. It's a 3% uptick even on that one. Revenue is up by 4%. And talk about the operational performance, at 32% surge coming in on the operational front of the company, despite somewhat muted top line growth. Clearly, cost saving measures at play for Dixon. Net profitability also is up by 27%. So you can clearly see the operational performance and the cost saving measures trickling down on the bottom line performance of the company, effect to which you're seeing Dixon also doing well in trade. We've spoken about Ashok Leyland, where the numbers were better than expected, and the performance of the commercial vehicle cycle is expected to remain positive. That's the word coming in from Nomura due to the demand framework. Now, they expect Ashok Leyland to outperform the entire industry. That's the word coming in from Nomura on Ashok Leyland, and a bunch of other names which we addressed for you. But guys, thank you so much for watching. With this, it's a wrap, and goodbye from the entire team who puts this piece together. Please do post your feedback for us in the comment section below, and follow us on the link at the bottom of your screen. For rest of the updates, stay tuned into moneycontrol.com and Moneycontrol app.